again, we wanted to get the process correct, the accounting correct. And so, with Martin's help, we kind of scheduled it out, and we took it in Gatsby, saw it the way that Martin had already had put it together. Otherwise, this would probably be a little bit later, but so good, it all worked out well. I do want to talk about, just briefly, we talked about the reclassification of the crossing guards, and that was actually, it's in this document, and then it rolled forward into the budget amendment, so that's why you see it again. So we corrected it in June, we made the adjustment in June 30, and then we moved it forward so that you could approve it going forward. One of the other items that we wanted to talk about, just briefly, David's done a wonderful job. I don't restate his numbers because there were a lot of numbers going on there. But if you look at page 6, just kind of an overview, on page 6, this first bullet that says that June 30, 2015, and we'll just talk about that $2 million that shows there as a change in their position. Again, as David said, one of the items that came up was the GASB 68. That's all school districts who have to show that amount. So part of that number is $3 million that we had to include as a prior period adjustment, and 3.6 is part of the current liability that we had to show. And then the other part of that basically would be the $4 million that we transferred for the crossing guards. Okay. Next item, I'd just like to highlight going forward. One of the items that David mentioned was the net income increase in the tech service program. And as we talked about earlier, the tech service program, one of the things we're looking at is always moving forward. And so we've increased that process as we've gone forward and identified new school districts. And so we hope to have those items in the next chapter that we present. Going forward, we've also looked at some of our items for restructuring our debt. In this capper, you would see that we actually restructured the 2012 B bond, which allowed us to take advantage of a lower payment for this current fiscal year. And we actually pushed that payment out for 30 months. So that will allow us to kind of concentrate efforts on bringing down some of the debt, as you saw on page 6, where we had paid $7 million now to bring that debt down. And we're looking forward also for future. We've talked with Oppenheimer, who's actually here at the meeting today, to look at how we can restructure some of the debt that we've had and take advantage of some of the lower interest rates that are out there. So we're looking at planning and making sure that we're looking out for the best savings for the tax dollars. I'm not going to go into a lot of the supplemental information, but on page 84, just so you can see that as far as our tax base goes, you can see that as far as our collection rate goes, we've been holding steady at basically a 98% for a pretty long time, and so that's a pretty strong indication of where we're going forward also. If you have any other questions, we're here to talk about those. Thank you.
Well, first of all, I'd like to thank our auditors, our outside auditors, and our staff for, I know how much work is involved in something like this. And I appreciate the clarity and the conciseness of the report. And I want to extend the appreciation to Dr. Sorrells. I think the effect of the personnel changes we've made are evident in the clarity and the accuracy and just how well the improvements in making these reports reflect what's actually going on. I'd like to start out with a question. Am I correct in regard to the pension fund and the health and our health care that we are required under the law to use TRS, and we don't have any choice? We can't go out and look for a better deal for us and for our employees. Is that correct?
That is correct. We are mandated, based on the size that we were an organization, we're mandated on the healthcare, and in part, based on number of hours, there's this requirement to be a part of the teacher retirement.
Okay, are there any other questions, comments on the audit? Yes, Dr.
I don't want to dwell on the negative, but you mentioned the material weaknesses, but significant deficiencies. Could you just go through those a little bit? And, as you said, there are things that we're addressing, but just to clarify what they are and how we're addressing them.
Tell me the story.
Sorry.
Okay. So,
And tell me what page we're on.
yeah, within the letter, the independent auditor's report on internal control over financial reporting is a 3-page document. The heading ends up in governmental auditing.
Yes, okay.
It's to the board, we've audited, internal control is the bold caption. There's a paragraph that says a deficiency in internal control, starts to describe what those deficiencies, how they're, what they are by definition. And then the bottom of that page says we have identified. The top of the next page, page 2, is the identification of those deficiencies. The bank reconciliations I spoke to and Denise did, it wasn't the same as the prior year. There was a system change. And what we saw, I think, was there was some unidentified reconciling items this time.
Right.
So maybe,
Last year, when we presented to the board, we probably had more items that were on the list for bank reconciliation. So we actually went out and purchased a automated system that allowed us to bring in transactions as the bank would bring in. We had probably 7, 8 bank accounts that were reconciling. And with the, I'm not even gonna tell you how many transactions those are. But the way these items are coming to our system, they're grouping them together, and we're able to now match them up concisely with our accounting system. And so with that process, there's just a small amount of training with the person who's now working that bank reconciliation. At that point last year, we had a previous person who was working it, so we did have some changes in staff and some training issues. So as David had mentioned, we've addressed it with the new software. We've addressed it with training new staff members. And so the items that were still out there happened to do with review, and then now we're going to have a different change of some staff to reorganize and provide overview and training of the process.
the second maybe is the review process around, we just had a handful of adjustments that came from the auditor side. Receivables was one of them, TRS accrual, and the state foundation funding.
On the receivable item, this was actually unfortunate, again, due to a change in staff. We had, actually, we reported a transaction twice. And so that was, the previous person, who's no longer in the department, had reported the transaction. And unbeknownst to the people who were sitting there, we had actually reported the transaction. And, but the amount of it was significant enough to bring it to the attention of the external auditors. As far as, the other one was TRS?
Yeah, the TRS accrual, state funding.
Okay, the TRS accrual was a timing issue. What would happen normally is, the state has always, we receive a certain allotment from the state every month. And so every month that transaction would come in, we had recorded it as we would normally record it. But because the audit was still open, this transaction came in December. So with it being a December transaction, it was recorded correctly as far as the accounting cabinet, but the treatment of it, because we were still under audit, we needed to record it a different way. And so that particular review of that particular transaction just did not occur timely. But we do have items in place to prevent that type of thing. And we will not have the audit open as long as it's been open. So those were time.
Good question.
But very good.
That kind of gets you there?
Yeah, I just want to make sure, I know they're not, it's a big of a deal, but I want to be assured that it sounds like you all are addressing
Right.
what it was, and that, and so it's nothing worrisome.
Okay.
If I may just, the other thing that they're doing that the staff hasn't commented on is when I promoted them to the positions that they have now, we still have 2 vacancies effectively, because they're doing their jobs, they're doing their old jobs plus the new jobs that I moved them to. So I say that to say, I think I identified before with the board some issues that we had previously, and Denise has been very forthright in making sure that we've got the right people in there with the right credentials to handle reconciliations, to handle journal entries, and we're just, and I think they're in the process now of modifying the job description so we can look for some additional.
So we're actively looking to, okay, because I wanna get them some relief, this has been a lot.
I know they want it too, because they're there every weekend, every weekend.
I do have another one, but
Please.
maybe it may be lengthy. You mentioned the, and I don't remember what page it was on, but, the $25 million, debt, and I just wondered if you could go into that a little bit and how our plans are, and if that's just sort of a, is that sort of a placekeeper number, or is that for real, and what we're, how we're paying that down, because I know that debt like that doesn't necessarily show up on the monthly reports that we get, because it's not part of the operating budget. So could you just go into that a little bit, because that, number alone, is concerning.
If I might, give Rick's layman, accountant version of it. When we were looking at how to book this, there were a couple of different things that were there, and one of the questions was, because we have long-term leases back on the buildings, do we have to, and David, y'all stop me when I get offside, you know, Rick, the non-accountant. But when we had that, do we determine that that's a liability? Well, my argument was, no, because each year, guess who's paying for that? The districts. That's part of the districts. We can't show cumulative revenue for $25 million from the districts to pay for that, yet the accounting practice is effectively we need to show debt associated with that lease. And so that's what that is, even though the source of payment for that is gonna be from the districts, not from our funds, that doesn't matter. Accounting-wise, it needs to be shown in that method. I had lobbied for and was unsuccessful, that's why I'm not an accountant. I lobbied that it didn't need to be, because of, one, that was one of the things, because of the method associated with, that revenue is coming in, let me go ahead and count the revenue from all the districts each year. Also, but they do that on an annual basis. So that's Rick's layman's, and then now y'all can get into the much more technical version of what happened.
He'll always say it's Rick's layman's, but then it'll be right on point. But yes, we have a $25 million lease obligation included in the long-term debt schedule. That long-term debt schedule then rolls forward onto the statement of net position, and that liability will stay there until the end of the lease term on those 4 leases, at which time that sale will be recognized, and gain or loss, and the lease will go away, and the liability goes away. And I think it's even a gain even 25 years from now, right?
It is.
The completion of the transaction will end up being recorded at the end of the lease.
And that's how long?
20 years for the first term.
So we're gonna carry that till then.
Yes.
For-
And then we'll be recognizing the asset that's on the books now will be depreciated. And then we'll be recognizing, we'll have a value, this is not a true number, but it's gonna be less of a value than what it is now, and then we'll net the two together.
We're depreciating, but it's interesting because we sold something, we're not recording the sale. We leased it back, we're not recording the lease, really. What we're recording is a liability. And at the end of the first term lease, it will record all the transactions, and it all boiled down to, we've got this purchase option.
I was gonna say the purchase option, which wasn't supposed to be in the agreement.
And that's what kicked
Our
us
attorney
in.
thought we might want that in there, and that's what kicked it over to
Okay.
this method of accounting.
So the reason it's showing up as a debt is because we can't record the sale of the property because we've kept that option to buy.
Under the standard JIC.
It is sort of more of a number that's out there, but it's not real, we're not really in debt because we've sold the property. Is that correct, or have we
Yeah,
not
could I
gotten money for
add
that?
one thing? As far, I'm sorry, as far as the,
This is not these transactions in my world
He's
work,
spent a lot of
so.
nights on this, and we've even gone to Yassi with this one, so.
I can speak to it as, it's a favorable item on the balance sheet. This is why. That's a holding item. What happens is we have deferred the recognition of the sale. So on the books, no assets were sold. So the standard says continue to depreciate the assets as you would in the regular manner. So what happens when you continue to depreciate assets? Your book value gets lower and lower. At the end of the first lease term in 20 years, that 25 million, when the sale is recognized, our gain would be bigger. So the lower the net book value when you're in the sale recognition, we have a higher gain. And that gain will go right back to the income statement and back to fund balance.
Well, maybe that's, so the 25 million that we're talking about won't be paid, it will be recognized as revenue, as a sale price, and the cost basis that he just described will be accounted against that to come down to the net gain in 20 years from now. Yeah, it's an unusual,
But
Sell
have
these
we
back
actually,
then.
have we actually gotten in the revenue for?
yeah, oh,
Yeah.
proceeds from the sale.
Yeah.
So we've gotten those proceeds, so
got
we're not sitting out there.
You got the
25
nail on the
million.
head, we got the money.
Okay, so we're not really 25 million, okay. This is what I just needed to, okay, I'm looking at this and this is a lot of,
We're deferring the
Deferring,
sale
okay.
and showing it as a liability.
Okay,
No, that's good.
I feel much better now, because as a layperson looking at this, saying, wait a minute, 25 million in debt, I thought we were paid for this, and we were. It's just
No, we did get
bookkeeping,
it from-
how we have to record it by the laws and how everything kicks in.
Yes.
But we're really financially, that's not the true picture.
And the reason that you couldn't go
Okay.
through all the transactions and account for the transactions is because there was that option.
That clause.
That gave us the ability to get back in.
Okay,
Yeah.
okay.
Good.
It's a great question. I was
No,
mad
thank you
enough
for
that I
clar-
went back to him and I said, I'll change the darn contracts. And he said, no, you're not gonna do that. And I said,
Well, at least I also feel
"Okay,
better
take
that
it
if
out."
everyone else was struggling with this and you had to go to Gatsby,
Yeah.
that there's a reason why I would have to ask about it.
Yeah, it'd
Okay.
be more than once.
Yeah.
Yeah,
More than
it's-
once, yeah.
Well, and I appreciate you all do your due diligence in getting those answers and making sure that everything we're doing is above board, we're reporting correctly, we're doing all this, by the book correctly, and I really appreciate that, because that's a lot of effort, and it doesn't make sense. But we have to do it.
Okay.
So
Thank you.
On page 46, there's this more, you don't have to look at it now, but on that, there's more to that note on the whole transaction.
Okay. Thank you very much.
Note 8, note 9.
I see, okay.
Is that it, Dr. Renner?
I think so.
Okay, are there any other questions or comments? Okay. Yes, on items B and C, all those in favor, aye?
Aye.
All opposed? Carries unanimously. I want to thank again our auditors, our staff, our administration. This is good news. Really good news.
Thank you.
Okay, the next item is consider approval of resolution authorizing reappraisal of property damaged in December 26, 2015 disaster. May I have a motion?
So moved. Second.
Okay, Dr. Sorrells.
Periodically, and this happened 4 or 5 years ago, maybe in '09 or something, when a event comes through, then there's the opportunity for that property is gonna be reappraised at a different value, and there's an opportunity for us to accept the reduced tax for that, for those entities, for the people whose homes were destroyed, et cetera. We did this back in '09, and Mr. Young may have more legalese associated with it.
Basically, under the tax code, what happens, normally your property is appraised as of January 1, and that value holds for the entire tax year. In the case of a disaster declared by the governor, if you elect to do so, then the appraisal district will reappraise the property as of the date of the disaster and prorate the taxes. In this case, because the disaster was very near the end of the tax year, it will have only a minimal impact. But the first 360 or so days will be appraised at the January 1 value. The last 5 days will be appraised at the post-disaster value, and so it'll be a very modest reduction in the taxes of those affected by the disaster
For this year, for this
year. And
15
then,
tax year.
and then January 1, everything's reappraised anyway.
So in effect, we're doing the right thing for the folks out there that had their property destroyed or damaged by the tornado.
Right, although because of the timing, the impact's pretty minimal.
Yeah.
Okay, any further discussion?
I have a question.
Yes.
So this will then, I'm sorry, this will show up as a credit to the person because the assessment for that year was actually on January 1, 2000.
No, the assessment doesn't take place until the tax taxes are adopted in August, but the appraisal is as of January 1, and then there is a reappraisal as of December 26, and then a proration of the tax bill. Your tax rate will remain a penny per $100, but it will be applied to a net slightly lower property value.
Yes, that, my question was, because taxes for that award that year were paid the previous January.
No. Taxes are paid between October 1 of the current tax year and January 31 of the next year.
Any further questions?
Yes, for somebody that has already paid their 2015 taxes, yes, it will be a credit.
Okay. Anything else? If not, all those in favor, aye? Aye. All opposed? Carries unanimously. Our next item is our legal report, and am I correct for executive session?
Mr. Chair, I can do it in open session unless there are questions that require an executive session.
Okay, proceed, Mr. Attorney.
On the Green case, a little bit of additional good news. Mr. Green's estate filed a motion for rehearing of the decision in our favor, and the Court of Appeals wasted no time in turning that down. So the case is over at the Court of Appeals level. They still have until the end of this month to petition the Supreme Court of Texas to review the case. So it's not over, but we've jumped one more hurdle. On the Dallas County Schools versus Vallet case, that's the case in Irving involving the young student who was mistakenly taken away from the elementary school on a DCS bus. The plaintiff has amended her petition to try and, use a technical legal term, wriggle out of the district's immunity under the Tort Claims Act. We have responded by amending our motion to dismiss, and that will be heard in a few weeks. That's all I have to report.
Are there any questions or comments on the report? Okay, if not, that's about it. Yes.
Mr. President,
Please.
I'm going to executive session, on the agenda item number 7. You could close the door.
On agenda item number
7.
7, which part of 7?
Well, it's, concerning the,
Okay, the bonus policy is not on the agenda.
No, it's not, wait, we can't go
So we can't do it in executive session or open session or any other kind of way. I'm sorry.
We can't discuss it all, I mean,
We can't discuss it today. We can put it on our future
I was
agenda.
gonna say, can we request to put that on our
Yes.
future agenda, please?
Yes, we'll run it through the policy committee and then come through.
Okay,
it's been 5:14.
Yeah.
yeah, thank you.
Okay, is there anything else for today? If not, may I have a motion to adjourn?
So moved. Second.
All those in favor?
Aye.
Thank you all.
Thank you, everyone.
You must have said.
I know.